I love the chart behind me because it shows why it's important to be a long-term investor and keep market volatility in perspective. In this chart, we have the history of the markets as measured by the S&P 500, which is the main stock market index that a lot of people in the United States follow and even globally. And what you can see is the value of the S&P 500 from 1929 or 1928 all the way to present day. And as you can see, the general arc of the markets has been strongly positive. In fact, the cumulative return is an astonishing 19,700%, as you can see up here in the upper right of the chart. But along the way, there's a lot of things that have happened that have been scary to people. It's probably a little bit hard to read, but I'm just going to show some of them. So for example, back here in the Vietnam War, you had a sort of sideways market. Up here in the front, we had the great stock market crash in 1929. We had the Iran-Iraq revolution, the Gulf War. We had the Iraq War. We had COVID. And the amazing thing when you look at these returns and if you look at the stock market is that when you're living through a downturn, for example, over here, I'm going to show this one. This was the tech crash. Since then, the market has gone on to deliver excellent gains. So the key point of this chart is to not get scared by downturns. As a long-term investor, you should expect that there will be volatility, but it's also important to stay invested and to take advantage of opportunities that arise so that ultimately you can prosper as investors have done over the last almost 100 years as depicted in this chart.